Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, December 17th, 2018. I am Frank Ochoa, aka PivotBoss. Here is a look at the daily time frame of the ES. We had a failed absorption signature that developed after last week's action. Monday with a rejection day, Tuesday, Wednesday, Thursday absorption off of the previous month's low, and Friday a stop run day down as it failed to hold the absorption zone. And now we're trading in the lower half of Friday's range and appearing to look like it's about to drop to new lows. We do have the Fed up this week. Everyone's will be watching to see what happens on Wednesday's Fed to see how the language is moving forward. Again, with the Fed, it's one of the most important things the market can watch: interest rates, earnings, headline risk, those types of things. And this is going to be very important to see how it plays out. But right now, the way that we have broken down on Friday and broken through the midpoint of Monday's rejection day suggests that we go lower in most cases again. So got to continue to watch the 26-25 zone. Any failure to get back above that area suggests we go much lower. And again, we don't really have much more to go before we hit the lows of the year. We have 25-29 down here. We have the LVN just below. We could be there in a matter of a couple of days if it really wanted to, or even one day if it really wanted to. And this is the zone between 2450 and 2500 in that area where if price were to drop into that zone, we could see for the first time some sort of reaction that brings us back up toward 2700, maybe 2800. As it is right now, though, again, this is not very bullish the way it looks, and this market just hasn't been able to get off the mat here from these lows. And when that happens, you have to flush lower before it can go higher. So again, all eyes on the Fed this Wednesday. We'll see what happens. Usually what you see is some sort of impulse move that occurs Monday to Tuesday, and from there we go quietly sideways into Wednesday afternoon's action. So again, we'll see how that plays out, but that's usually the norm. If we take a look at the NQ, you'll see here that this one hasn't quite taken out lows, but it had the same type of behavior. We had a move higher on Monday, kind of Tuesday, Wednesday, Thursday here with an inside day hold, and then the stop run day occurring through 66.75 on Friday. We're now holding in the lower distribution of Friday's range, again suggesting that we could see more weakness. We do have kind of compression that's occurred here with this range going sideways around the 6900 level, and now breaking this range to the downside again could challenge the lows of the year. So you can see here, if I bring this out a little bit more, the lower edge of the range here takes you to about 62 and change. This is the low of the year that comes in right around 6200, and that is a great LVN between 6K and 6200. If price were to drop into that zone, again, it could be a good area for bulls to defend for a return back up, and it could take us as high as 7200 to get back up to those levels up here and still be range bound sideways overall. So again, we may need to come down here and take out these lows and hit the LVN before anyone comes back into the market. I mean, right now the market is very bearish overall. Every bounce has been short-lived, and this latest one here failed outright. And so again, sometimes you need to flush down before you can pop back up, and that may be the course ahead, is to test those lows finally. So today we have narrow overnight ranges in both the ES and the NQ with tails at the upper end of the range. That suggests more downside here today. If we take a look now at crude oil, you'll notice crude has a very narrow range overall. Another inside type of day. Look at the range that has developed here over the last month, 3 weeks or so. Very sideways. You can basically put a line through 52.50, and this is kind of where we've traded. And now this thing is so super compressed that at some point we see major movement. As of right now, we're not seeing any kind of engagement at all. It's been narrow range sideways trading. We haven't been able to see 2 good days up ever since this whole move has dropped. This was the last time. This was a great opportunity here on Thursday, and Friday just gave it right back up. So again, this market hasn't really demonstrated an ability to go anywhere, especially up. And if there's any failure to get above 55s again, we could still have more downside to go. Remember, we have the 49.17 CLVN that is yet to be reached. We got very close to it. And then down below, you have the next LVN would take you to about 39 to 40. So perhaps, again, if there's a failure to get above 55s, we still have down toward 40, 38 to 40 before this thing becomes cheap. So again, right now, sideways action, not a whole lot of movement overall, and we could have more downside price action ahead if 55s cannot be reclaimed. Let's take a look at gold. You'll see that gold right now is pulling right back into a very, very solid area where bulls want to defend. I mentioned before that on this pullback here, we could see a pullback as deep as the 1227 halves here, which would be value, which is shifted down from the 1287s, and it would still be a buying opportunity higher. We may not even get a chance to come back this low, as price is now pushed into the trigger zone of the PIMAs here. And anytime you're trending up and you pull back to the PIMAs like this, this is an opportunity to buy the dip ahead of the next squeeze. Again, we are holding 1240 overall. We continue to trade around the 1240 to 1250 zone. This pullback right here, again, could be a solid buying opportunity for a squeeze into 1260s for the first time since late in the summer. So again, we could be looking at another round of strength here out of gold, as long as the 1237s, 1235s remain intact in the near term. Lastly, let's take a look at RTY. Here's RTY right here. This one has been extremely weak. This was the first one here to take out the lows of the year. And again, we're not seeing the kind of reaction that we thought we could see down here just yet. Again, it's barely taking it out. It closed down on these lows. But we are coming into the LVN between 1400 and 1425. If you look at this thing a little bit back here, you can see this zone right here, about 1415, has been very, very important overall. And coming back into this zone or coming through it, again, could provide an opportunity to swing this thing back toward 1550, which is the HVN above. Anytime we start getting too far into the LVN down below here, there's a tendency to come right back up toward value. So again, we got to continue to watch this and see if we find some sort of major rejection here. But being on these lows like this provides an opportunity. It provides an opportunity, but you have to be patient and wait for that opportunity to develop. As of right now, we continue to show signs of more weakness, and we could have another continuation downward. But at some point, do we find some sort of major rejection leg or some sort of major turnaround from these lows? That would provide an opportunity to pop this thing back toward value over the next 1 to 3 months. So again, we'll continue to watch this zone below 1415. Alright, that is it for now. We will see how this thing plays out heading into the rest of the session with all eyes on the Fed on Wednesday. Good luck, trade well, and I'll see you in the trading room.